I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Byron Boston, President, CEO, and Co-Chief Investment Officer of Dynex Capital. Byron, thanks so much for joining us.
I appreciate it. Thank you for having me.
Can you start by telling us a little bit about your company's investment philosophy?
We're a mortgage REIT, and our overall philosophy is one of executing a simple strategy with a keen eye on managing our overall risk exposure. So our key tenants are conservative, short duration portfolio, diversified portfolio with both commercial assets and residential assets, and overall, as I mentioned, shorter duration, high credit quality. So 90% of the portfolio, over 90% is AAA or higher. Approximately 100% of the portfolio all matures or resets within 10 years, with a huge concentration of our residential assets inside of 5 years, and with the longer duration assets being in the commercial sector. 60% of our invested capital is allocated to the commercial sector. 40% of our invested capital is allocated to the residential sector. With the diversity, the portfolio is structured to perform in a variety of market environments.
And in this current environment that we have now, what are the best opportunities you're seeing?
So since last summer, I would say 95% of our marginal investments have gone to the commercial sector. The value we see in the commercial sector at this point is well-defined cash flows. If interest rates rise, it'll be because the environment will be supportive of the commercial sector. So in other words, better economic growth, better credit environment, supportive of the credit spreads in the commercial sector. If rates were to fall versus the residential sector, the commercial sector cash flows will remain stable, protects us against an increase in prepayment risk on the residential side of the balance sheet. So if you look back to last summer, after interest rates spiked approximately 100 basis points or so, we've allocated most of our marginal investments to the commercial sector.
And obviously interest rates are a major factor, but what are some of the other macro factors that you think could have a key impact on your operations?
The number one factor, the mortgage REIT sector is a great business opportunity. The mortgage REIT sector in general has a tailwind behind it, and Dynex Capital in particular. One of the largest macro factors today happens to be the central bank involvement in the free-flowing capital markets. But one of the key components happens to be our financing costs are low. Our financing costs have been low since 2008, and they've been relatively stable. We expect those financing costs to continue to be relatively low and stable for some time in the future. So we monitor central bank activity very closely, which obviously will be a function of the overall economic growth globally. Since 2008, we've had an opinion that rates would be lower for longer than most people expect. We continue to believe that. Our main concern and thought process is on the front end of the curve, which is where our financing costs are drivers of our financing costs. It's also where you'll find, if you look at the structure of our portfolio, most of our duration is in the front end of the curve. So we're most concerned with central bank activity, which will obviously be a function of overall global growth.
Byron, thank you so much for joining us today.
Awesome. I appreciate it. Thanks.
For more on this and other REIT news and information, be sure to visit REIT.com.